All right, everyone. Sorry for the lateness. We are having some technical difficulties with the website. It's about 8 o'clock. I'm sorry, about 8:30 Eastern Time on June 28th, and this is for June 29th. You're looking at the pound on a 60-minute bar, and you can see the market has formed a bit of a triangle pattern here over the last several hours. In fact, for most of today's session, you can see the market has been trading into what I call the pinch. The only thing that is giving me some pause on the downside is this wide area here where the market has been bouncing around, and you can see there's been a lot of volatility. It's pushed out several times. One time to the downside had a lot of momentum, but then also the same move to the upside. I think though if we do manage to get a break back into this area, that we'll get an extended move at the very least to the bottom here, which means we're looking at a move of about 25 pips. If the market does manage to break to the upside, though, we're looking at a much more robust move to the upside. You can see here there's about 43 on the last high. 143 is over there. So there's quite a bit of room, I think, to the upside. Now, if the market does get going to the downside, let me switch to this 4-hour bar here. You can see that there is some support here. And you can see there's also some support here. But I think if the market does manage to break down, we can see an extended move. Let's go ahead and back up here. More than likely, let's go ahead and draw in this line here. And we'll extend it there on the bottom. You can see that the market, roughly speaking, is trading in this upward sloping lane now. So if the market does get going to the downside, maybe 97.30 for an extended move as the market continues down. So what I'm looking at here, let's go back to the hourly bar. I'm looking for a long trade here. Let me draw this in a different color. Do red, clear it. So long 1 point, whoops, so used to 1 point something, 2.0043 with a stop of 30 pips. That's going to put the market just in this area here. Now, if you want a little bit more of a conservative stop, you'd want to place it, now this is going to be a fairly large stop, down either below this low here, which means you've got to go below 2. That's going to put your stop in the neighborhood of 45 to 47 pips, because you're going to want to put the stop just below $2. I'm using a 30 pip stop just because I really believe if the market does break above here, we're going to get a momentum move anyway. Also, I'm looking to take a short position below this low, which is again below this $2 level. This would assume that if the market does break back below 2, that we're going to get a momentum move at the very least down here, but again more than likely below this 99.30 level, which has this little low over here. So this is going to be a short trade below 1.9993, again with a stop of 30 pips. Both of these trades, I think, have well over 100 pips worth of profit in them, to the downside actually considerably so. I think if the market does manage to break here at 99.90, you're going to see a retest of these lows here at 99.30, which then will eventually, I think, lead to a move back down here to 98.90. That's what I mean. You got about 100 pips to the downside, I believe, if the market does break that low.